Hello guys, it's officially our third day doing 21-day challenge of analyzing the Forex market with gold. Like, wow, I separating gold. Like, all right, whatever. Let's start our analysis. I will, let's go through why I took these trades and why I lost two of these trades and why did it happen and why you won't do the same mistakes like I did today. So again, welcome to my channel. I'm brand new on YouTube world. Therefore, spread your kindness and share this video with your friends. Like, subscribe to my channel, whatever you do with the YouTube thing. So yeah, without going further ado, let's get down to grinding. All right, I'm gonna start with gold, no cap, like straight to serious thing. Start straight to a serious thing. All right, why I took these trades, like two of these trades, and there were a couple of trades that I got stop out, not a couple of like four trades that I got stop out, and I'll tell you why I got stopped out. It's easy, literally, because of liquidity. I didn't wait any liquidity sweeps, any other thing. Therefore, I got stopped out. All right, let's go up to 15-minute time frame to check if I'm on a right trend, right? All right, we are overall on a downtrend, bearish, if you are calling it in a slang way. We have our higher highs and we turn into higher lows, high lower highs, lower lows, lower highs, lower lows, lower highs, lower lows, lower highs, lower lows, lower lows, like literally. Again, we like changed the trend. We had a market shift to stop out this retail traders and to grab some liquidity right around here, like I mark it out as dollar sign. So we grab the liquidity and we went straight down after that, creating higher lows and lower highs, higher lows, lower highs, higher lows, lower highs. And so we liquidate, like we grab another liquidity here because there were very good amount of liquidity, all these below lows, there were a lot of liquidity and they are not swept yet. They weren't swept yet. Therefore, I took the trade for I took I took the trade for buys because I saw a really good liquidity. And after liquidity, what happened? Like if we go down to 5 minute time frame, which is pretty damn simple to explain why I do the trade. Like there were liquidity sweep, obviously, and what happened after that? Like this is obviously a liquidity sweep. Tell me it's wrong. Like there is a very bearish or bullish consolidation with long wicked candles, which leads us to liquidity sweep, as we all call, and what price did. Like there were obviously like literally simple market shift, like small, like little market shift because we have our two express that we had. a real liquidity sweep. What we have after liquidity is we have V-shaped reaction. V-shaped reaction. There, that's called liquidity sweep. And what happens after V-shape? There will be break of structure or whatever you call market shift. Like this sort of structure happens after liquidity. So if it's a downtrend, it goes up. It surpasses the last lower high, which is this this move, this point, and it like surpass this moment, surpass this price range. And what price it created market shift plus break of structure, whatever you call, and to grab some sort of liquidity, it comes down. So like what most retail traders do when they got this sort of move, like they get into sort of FOMO because there were like large candles, largest candles. Like you see that, and they try to get into this trade without wasting any time. They really want to make a lot of money with short period of time, meaning that they really want to get into this FOMO emotion, which is freaking damn ridiculous. So why I didn't really get into this, because the reason why I didn't get into sort of like a FOMO was I'm not a retail trader anymore. I'm not a retail trader anymore. I'm like becoming professional because I'm understanding how market works, how market structure works, and how to control my emotions and you name it. I'm becoming professional trader. I'm no longer a retail trader that gets into like sort of FOMO emotions, like whatever you call. And yeah, price respected it, like literally. Yeah, really, literally respected our zone on 1 hour time frame, which is pretty damn beautiful. Beautiful, as obvious it respected. Comes price comes down to grab sort of liquidity. And why I like didn't mark out these lows as demand zone was it's not like it cannot be respected because it's in the middle of nowhere, and price wants to go really hard and grab even more liquidity because it's a pretty damn large move, right? So what price does, it goes to the extreme, like extreme. Price wants extreme zones. Therefore, price comes down to the extreme zone. We marked out like it respects it with this sort of thing you called, I don't know, consolidation. So it comes down and we marked our demand zone because I don't really know what's gonna happen because I waited a while for this to get respected, and it did. So I marked out my demand zone. So it's going to respect because it created higher highs, which obviously break off structure, right? Because we're officially uptrend. After liquidity sweep, we have a sweep liquidity sweep right around here, and what price it comes our liquidity zone to grab even more liquidity before going straight up. So it priced it, price comes came down and grab a little bit of liquidity from here, creating higher highs and no, it's not liquidity zone, it's bigger structure. And what price it comes down to our demand zone to get even more liquidity before a before a serious move happens. So it did grab liquidity and we won a couple couple of not couple two trades exactly, and yeah, that's exactly how I managed to win these trades. And on top of that, why I stopped out other four trades because I don't really I know why I stopped out because I was on a sort of like a FOMO situation. Like I said, I'm becoming a professional, so I'm getting market experience, right? So I learned my lesson today. So I'm not going to open too many positions, believing my confidence that price is going on my way, on my direction. So stop doing that because it's not good, really. Because what price said right after hitting my TP take profit, price comes down. I thought, all right, it's respecting my demand zone. So I was like happy, ooh, ooh, happy, happy, celebrating with champagne. So it's eventually goes and hits my TP, and it wasn't. It didn't. Literally, literally comes down to grab even more liquidity. So I became the liquidity with four trades straight, on and on, stop out. I I got into this trade right around here. I'm gonna delete, and I got into this trade right around here, and I got into this trade right around here also. So I got into this trade in in here too, which is absolutely ridiculous. That totals my trades into four trades in a row. So yeah, that's what happened. Yeah, I learned my lesson. What you should not to do, like literally, you go up to your higher time frame and mark. You see that thing, right? It's an extreme zone, like right. You had your liquidity stool, you have your like internal market shift, and what price break a little bit of structure and comes down to the liquidity zone like on a 5 minute time frame. All right, so what price did, price never ever like never trade on first confirmation on your extreme zone when it's going to getting respected. It eventually get it eventually gets respected from the first move, like first hits your demand zone and get the price gets reacted and go upwards for a while. Like it might be sort of significant or noticeable. But you don't care, like you don't give a freaking flying freak or you know like you get the point, right? You don't care, you let the trade be itself. I don't really want to get into the first confirmation. I really want to wait for the second one. And you waited like it's literally inducement. Induce retail traders to get into this trade, creating FOMO. So if you don't get into this trade, you're gonna lose it, lose all your money. So what every retail traders does, oh, I don't have, I don't want to wait. I really want to make a lot of money within a short period of time. So they do what? They literally open a whole bunch of positions and hope for the best. It's not gonna work that way, bro. Not going to work that way. So what you are going to do, you don't enter on first confirmation, you wait for the second one every single time only in extreme zone. This is our extreme zone because after liquidity, every zone like around liquidity zone they're extreme, right? Because after liquidity, you are seeing a really big move. You look at that, isn't that big move compared to these ones? It is actually. So after a really big move, price comes down to either extreme or sort of like a middle zone, you wait, you it doesn't really go to your middle zone often, like go to the extreme fully. So that's why you wait for the price to come to the extreme zone and gets respected. You enter trade after your second uh after your after the price respect second times. Like you don't enter your initial reaction, you enter after the initial reaction. Like after this is initial reaction, you enter after it, like which means right here, which leads us, if I would have taken this trade, so literally like I would do it right here. Like I don't really go below this liquidities. I just go like little bit of giving a breathing room. So yeah, we could have made a pretty dang large move because I absolutely wouldn't go here because it price blast through it. This our supply zone. I would go here probably like with full confidence, not like it's sort of like a near zones. Like there is liquidity. Like they are too close to each other. Therefore, there's higher likely for the price to, without noticing, like blast through it. So anyway, I would go here without any risking my emotions, any other thing. So what price did, like price goes up and swipe the available liquidity here created with this long wicked candle. So like let's like create like mark our liquidity candle. If it's gonna respect, I will enter buys. Eventually it's gonna respect, it's not going to respect, I think, because look at that price action. It's choppy plus it's volatile. Maybe it's gonna respect, we'll see. So yeah, price respected this is already respected. Like it's no longer going to respect because still liquidity zone. After liquidity, like you one shot, like I'm going to share one real freaking sauce that no other traders wants to share with you. Like if your price gets liquidated like this, if you see this sort of movement, like you mark out your full candle from upward to the down, like literal full candle, and you make it longer, and what price it eventually comes down, like respect it's this song, like because the moral of this movement after liquidity is pretty much simple because price grabs liquidity from these lows, like literally it's easy, bro. Trading is dang freaking easy. Nobody understands that. It's just like famous move, famous movement. Like let me do my color thing, like beautiful color. What we're gonna do? Like give me some beautiful color. Right? Yeah, got it. So this is the movement. This is double tops, double bottom, right? Double bottom, which means most traders, oh, I saw a double bottom. What we're going to do, we're going to sell based off of our support and resistance levels. That's freaking retail traders. It's going to work someday, but it's pretty much inducements for professionals, for hedge funds to liquidate all the retail traders at the end of the day because they are creating double bottoms, making retail traders getting to sell or buy position early So yeah, they see your positions. Like there's a lot of liquidity here. Let's grab it before giving a large move. So they grab the available liquidity, and after grabbing available liquidity, what they have to do, they push the price upwards, which takes a lot of power, a lot of money. Therefore, what price does after a little bit of movement, like showing it's actually liquidity sweeps, not a simple structure. So price goes up, like literally freaking creating a V shape. So what price did after that, price comes down straight to your liquidity zone, which I drew recently. So yeah, pretty damn simple. I'm swearing a lot, I know, but yeah, it's sort of like emotional attachment with this trading thing. Your mental health goes down 100% if you start trading. Yeah, why I would trade until price hits this moment, because there is there is available liquidity, like there is our support, not support, our supply zone, which has a potential to make the price reverse. So yeah, pretty damn simple, like, all right, it's supply zone, yeah, price respects my movement, literally my trade, my position 100%. The reason why, because I'm a professional trader officially right now, because nobody ever teaches that, ever, literally. You pay thousands, like literally thousands of dollars to learn this shit, to learn the thing. I know I'm being nasty, I'm swearing a lot, but that's what it is. That's how trading works. You don't wait, you act. All right. You don't wait. You don't wait hours for the market, for your trading chart happens. You just go and trade, because there is 1 minute candle, which is the same as 10 minute, which is the same as 7.5 minute, which is the same as 0.5 minute candle. They're all the same thing, but it's just a matter of amount of time you spend. It's just a matter of the time you wait. Yeah, gotta be quick, gotta be quick, right? Therefore, I'm a scalper. I'm not a swing trader, I'm not an intraday trader. I'm sometimes being intraday trader depending on my like confidence, like the amount of chillness I'm going to get. If I'm going nasty, like I surely go to 1 minute candle, like my swing range would be my swing range is actually 15 minute. My mid range is 5 minute, to see what is going on, where can I act on it. Like my entry time frame is 1 minute, which is pretty amazing, right? Beautiful. So we understand we understand how partially the price works, right? So that's it. That's pretty much it. That's simple. Trading is damn freaking simple, but you don't know it. You don't know it yet because you're not obsessed yet. If you're obsessed like me, you wouldn't sleep at night, because it's like, what is this? Damn 144. You see that? 144. I was going to sleep, but like the urge of recording my trades came right after, like, right in my face, saying, "Yo, bro, you're not sleeping. You aren't doing what you're supposed to do." So I was like, "All right, bro, let's go." And now I'm trading. All right, the next pair was really aggressive for sure. on Forex because I counter trade. I counter trade. I not trade. It's counter trading. Counter trading. Is it audible? I trade on a counter trade. So what I did pretty much simple. So I moved to 5 minute 5 minute time frame. Yeah. Are we in 5 minute time frame? Yeah. We're in a 5 minute time frame on a 5 minute time frame. So what I did, I marked down my swing range, like very sweet. 15 minute time frame. Look at that chart where we are going. Are we bullish, bearish? So price showed us we are we are bearish the whole time. And I was like, all right, so I'm going to sell. I really want to look for selling opportunities instead of buying because on a bear scenario, if you're looking for buys, you are obviously counter trading. It's not good. It's very aggressive and there is very high potential that the price hits your stop loss if you're not that careful, if you're not that experienced, if you're not that if you don't have that knowledge, level of knowledge, that you really feel it's like pullback. Therefore, I can actually get into this trade and counter trade it. So yeah, it's freaking hard to counter trade because it takes a lot of risk. So we move to 5 minute candle, which is beautiful. We're still seeing bearish scenario. It's sort of like a little bit of moment of liquidity sweep, and we have our news came out. I don't know what it is. Like it's not news, obviously. It's like high volatility. So price comes down and goes up, creating a little bit of market share. It wasn't enough. It didn't have any buying pressure, so price went down, grabbing enough liquidity. So what price did after that, price goes up on our 1 minute time frame. What price did, like price literally respected our, wait a minute, respected our supply zone and went down. So like I wasn't waiting. I was aggressive. Like I don't really want to hold my position longer, so I'm out. Price literally, you don't know where the price is heading. Like it grabbed liquidity, so it's going up, goes upwards. Pretty dangerous. So the lesson I learned from here is I was in fear, like I get out of the market too early, pretty dang early. So there were available liquidity, so we swept the available liquidity, creating sort of like a breakout structure, showing a little bit of pullback, respecting some sort of supply zone that we had entered. So there were available liquidity after this level of POI, point of interest. So what we did, we grabbed enough of that to respect our another supply zone, which is pretty dang. I'm using a lot of swearing bad words. All right, I'm not going to use it anymore. So we grabbed available second liquidity. So we break the structure and show a little bit of pullback. And what we did after that, we had another liquidity zone. So we grab available liquidity from there also. So yeah, eventually we, after grabbing enough liquidity, but press went out freely. Oh yeah, I'm free now. I can go down as much as I want. So it pressed it, Price went down, literally, tower demand zone, freaking demand zone. Like not exactly the demand zone, but around demand zone. Around demand zone, not exactly toward demand zone, but if I hold a trade, like literally, like we won't be stopped out because of our trading position. Like uh, it would have been too fearful and nightmare of all time because what price it like price goes down at, oh, before eventually respecting our zone, price goes spikes right up to grab even more liquidity. Oh, right, like that's the name of the game. The name of the game is grabbing liquidity. If you like, what comes after that? If you cannot identify the liquidity, obviously you are the liquidity. Therefore, try to identify the liquidity zones where you cannot be liquidity anymore. All right, that's the name of the game. You got to be quick of identifying liquidity zones, so taking advantage of them, exploit them literally inside out. Then it will be profitable. Then you'll make a lot of money. So price spikes right up to grab even more liquidity. So it grabbed more liquidity before hitting our TP. Obviously, like, literally, it's simple. It's damn freaking simple. So the next trade, what I did on the next trade, like the price obviously bearish scenario. So waited like after grabbing enough liquidity from here, price spikes right up to grab even more liquidity. What I mean by liquidity, like this is the highest point of, oh no, it's not grabbing the liquidity, it's respecting. It's getting respected from the supply zone. Supply zone, yeah. Supply zone after respect getting respect from supply zone. Price quitting. Internal market shift, that means it break the structure. Oh, it broke. It broke. It broke the structure, so it's officially bearish. Like internal structure was bullish right around here because of this little internal market shift. So it's officially bearish because of this internal market shift. So that means we should look for sales from there. So we gotta be quick and we gotta mark out our supply interests. So what price did, like it respected supply zone because we created market share by create our market share by creating lower lows and lower highs. Pretty obvious, right? Price went down straight, like literally just a matter of hour or so. Like price went down, so it's created sort of like a pullback right around here. We don't have anything for the price to pullback. Sorry for that. So price pulled back to our recent the supply zone. So what price it price went down eventually. So yeah, and again, because we're in a bearish market scenario, so we can actually mark out our supply zone and wait for the price to get respected 80% of the time. So price what the price had respected our supply zone, and then price comes down, grabbing liquidity like freaking liquidity here. There were liquidity like literally. Price got liquidity, price broke the structure, so went straight up because how we know price broke the structure? No, no, grab liquidity. We can notice from these doji candles, long wick candles. It's easy. And V-shaped reaction. That's obvious. That's the obvious one. So that's how I entered trade of 1 to 10, freaking 10 risk reward. What that means for the people that really doesn't understand yet, if you risk $100, you got $1,000 back from the market after getting your price hit the TP, right? Pretty damn simple. So yeah, that was a trade I took. So yeah, if I continue this explanation, grab the liquidity. There were some liquidity sweeps, so price didn't really come to our demand zone because of these largest candles. Because to grab this liquidity, price needs a lot of sellers. So price doesn't have any sellers because of it's a bullish market. Therefore, price peacefully comes down here and respects our demand zone, not grabbing any liquidity because, yeah, like I said, there is no any selling pressure. So it price respected the demand zone, demand zone. Right after it respected the demand zone again, and again respected demand zone, respected the demand zone, creating a little bit of just a little bit of supply, liquidity sweep. So yeah, there were any demand zones, but what price it was sort of like a pullback, or you name it. Price went down, creating a really good demand zone that which got respected after that. Like he go go up there to the recent supply zone and then reacted from it, like liquidating this highs, and price what price does, like what price did not does that goes down because there were no enough buying pressure, only selling. So eventually this is our trading analysis of the day. Oh, it's not all. We have one left. Like this is the last one. Euro USD. I got the insane one. I made a bunch of mistakes here when I was trading. So overall, yeah. First, identified market structure. So it is obviously bullish. So I have to look for buys, right? Buys, only buys. So what I did, I actually literally created a demand zone. Yep. I make it very tight because it's extreme, sort of extreme. I wouldn't say extreme. So at price liquidated. So I was like, oh, there is a liquidation candle because it's with my available. No, no, no. it swept the last higher low, yeah. And what I did, like I waited pretty pretty good, and it created a really big bullish candle. So I waited. Oh, its price is actually going to come down and goes up to continue this trend. So I was right because of this liquidation candle, price came down and respected this liquidity candle, liquidation candle, whatever you call it. Price went spiked right up. Easy, 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 easy. So I was like, oh yeah, that's too easy. So I'm going to get into this trade again to get even more money to make even more money. So it was like aggressive, really, really wild at the time. So what price created a market shift. So I was forgot to literally again know the market structure. I was like, oh, overall trend is bearish, so I'm looking for buys. So what I did, figured it out. Like I counter traded. Eventually, I lost. Like I said before, if you counter trade, you have very high probability that you are eventually going to lose 100%. Therefore, never counter trade. Know your structure, know your bias before trading, before looking for any point of interest. Point of interest are everywhere. You can find it out. You can find from everywhere. What you cannot find, like you cannot notice, cannot be, you cannot notice is your market structure and liquidity zones. That's the main two source and two essential part of trading and taking trades. So yeah, I lost this trade because of this counter trend trading. So I was like, oh dang, that's a counter trend. Let's get into the correct one. So I was like, I'm gonna wait for the pullback happen and then I will enter. So I waited for the pullback, then I entered like right on spot. Like that's a spot on. That's the most spot on ever. So I was like, oh yeah, going to I'm going to aim the next demand zone. I'm not going to like shoot it for the best and hope for the best and put my TPs on right here because it's sort of like a pipe dream at the time. I was thinking about my trade is going to go eventually down and goes up, grabs a little liquidity before showing the actual move. So it wasn't right, and I was right at some point because I mm, get out of the position on time because most it might happen, but no, it didn't. So yeah, pretty much I want to trade on continuation trend trading, and what I did right here, I didn't wait any liquidity sweep because my liquidity sweep structure wasn't that valid for sure. It wasn't that valid. Therefore, I got liquidated. I thought liquidity liquidity sweep was here, but I was turned out I was literally wrong, 100 and 1000% because what I did, I was in a trade because of blindness, because of the FOMO. I was like, oh, I saw a really big move, so I gotta get into this trade because this trade is going to go really bad. So So like, all right, let's get into that before I lose the opportunity. So I was like, all right, let's do it. So I did it, and I stopped up, stopped up pretty dang. Or so yeah, the moral of this story, the moral of lessons that I learned today: never ever trade on FOMO, and wait for the liquidity sweep before taking any trades. Know your bias, actual bias, whether it's bullish or bearish trend, because when you're scalping, when you're trading in a very um, low small time frame, you gotta know where your bias is, because on a small time frame there will be a lot of noise that you might get distracted from it. Therefore, you gotta be quick when it comes to trading, when it comes to scalping. Therefore, yeah, you should know where to get out of the market, where to get into the market. So pretty much it. You gotta you gotta be quick making decision. On scalping, you cannot trade one and sit down for the rest of the day. You gotta trade quick, 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 and more. Quick, more risk management. You gotta do your risk management thing, because without it, you will lose it all in your one trade. Because trading, scalping is not a it's no joke. It's no joke, 100%. Because at the end of the day, scalping is one of I would say one of the stressful, like stress requiring type of trading, because you you actually deal with a lot of noise, a lot of risk, and very short time to think about the market and take trade. Therefore, yeah, know your bias and know where liquidity is and inducements, and never be like a like retail traders to get stuff out because of some sort of shitty inducements that can easily be swept. Like, never rely on patterns, never rely on candlestick patterns, like structural patterns, whatever you call it. Believe in yourself, believe in your ability to predict the market, how market moves, and where it moves, when it moves. The time is going to move, like the place is going to move. So yeah, pretty trading is simple until you learn it. Well, so yeah, today this is the end of the video. Thank you for watching till the end. Come if you come to hear of the video, that means you are very curious about trading and learn more about it. So I'm actually planning to open a really free course of trading, explaining how to get from zero to hero in a trading field. So it's a really good opportunity for those who doesn't really have a trading mentor and trading teacher in their lives. So therefore, take advantage of it. The course is dropping, I don't know, maybe within 2 to 3 months. I don't know. It depends on me. Depends on my schedules and on what I'm doing and what I'm really focusing on. Therefore, I'm not really focusing on creating another a course, because I'm making enough for myself. I don't need what I need audience. I need live audience that really knows me. And on top of that, I need I don't really need an audience, but I need people to feel the freedom like I did. Not like I did, like I'm going to feel because I'm manifesting. Even though I'm not really making enough money, like I'm saying it these days or my in this period of my life, I will be making enough later, shortly, inshallah. Therefore, what I'm saying is, I really want to help people to get their freedom set and never worry about money and staying homeless in the middle of nowhere in their lives because I really want to help people to get their freedom back in their early 20s, 30s, 40s. All right, for those who haven't really get there. So therefore, take care. Thanks for your attention. Yeah, it means a lot to me if you watched until this time. Goodbye.